India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Fresh new week, and we are starting this week on a Tuesday, of course. Yesterday was a market holiday with voting here in Mumbai. And we'll get you everything you need to know as we kick off another week. And of course, not very far away from the first week of June, which is, of course, election results. We are coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. As always, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. So many cues this morning, right? The voter turnout could have been better in Maharashtra for sure. I mean, it was just somewhere around 54-55%. But overall, the market is not looking too bad. So we have lots of cues today.
Well, and no worries on the global front, right?
Yeah.
You have heard more positive stuff in the last 3-4 sessions rather than negative. So we go to according to our own cues from here and wait for the big political outcome.
Absolutely. And, I think you have... I'll just start with elections, which is, of course, the big one. And for whatever it's worth, this voter turnout business has been analyzed to no end, to death. But really, there is no way to tell whether it favors a low turnout is good for the incumbent, a high one is good for the opposition. But for what it's worth, the data is up on your screen. This is, of course, according to the Election Commission, which last night said that the turnout in the fifth phase was approximately just over 60%. The number was just under 62% in 2019 for these same seats which went to poll back in 2019. So it's not very different. I mean, this number could rise by the time the final numbers come through. So in any which way, it's not dramatically lower. Let's just sort of say that's the takeaway, really. So is it really incremental Q based on which the market perhaps will trade? I'm not very sure. Now, Prime Minister Modi, in an interview to a television channel, essentially predicted that, he predicted a post-election rally which could propel markets to new highs. Now, this is coming in from the Prime Minister. Of course, he's an election candidate himself. So you got to sort of, take that to that degree with a pinch of salt. But it's interesting, and I think markets will pay attention to this. More than anything else, the confidence that he is exuding as we sort of wrap up this entire election season. It's been a long election season, but I think over the last couple of phases, at least from the body language, what we're hearing in terms of sound bites, etc., it's looking better and better for those who are betting on the fact that, the incumbents will come back in a strong kind of a way. Now, another sort of, not from a local perspective, election perspective, from global perspective, was the rally in metals, right? Really big move in metals like copper, which has broken out to a new high. This, of course, happened yesterday. But even gold is at a new high. Silver saw a large rally. So, the commodities complex saw a pretty large move, and some are kind of linking this, especially the move in copper, to some of the sort of property sector measures which have been announced in China. We'll talk more about this as we go along, but keep an eye out on the metals complex here as well. Saturday, of course, we had those 2 hours of trading, and Vedanta did very well. We have overnight cues as well. So Nasdaq was up about 0.65% last night. And this is, of course, despite the 10-year, which went up 2 basis points. Dollar index is very steady. 104.5 or so is where that is at. Oil prices stand slightly north of $83.5 per barrel. So this is, the new stuff, the new stuff as we come back this morning. But now to the old stuff and circle all of this back to levels here. So on Friday and on Saturday as well, we basically saw follow-through buying from the prior sessions. And the Nifty is now taken out the last sort of retracement, which is the 61.8% retracement of the fall that we'd seen. And what that basically means, we left off at 22,500 plus. What that basically means is it's a kind of line of sight opens up to the previous all-time high. Now, it happens later. That's, of course, debatable. But the point is, FIs are also starting to come back. So they bought on a Friday worth about 1,617 crores. They were net buyers for the first time in about 11 trading sessions before that. And they buyers for the first time in May as well. The numbers speak for themselves. FIs selling 35,000 crores in May. Locals matching them dollar for dollar, rupee for rupee, and buying about 34,000 crores. So almost equal amount coming in from both FIs and DIIs, netting each other out. Now, Nifty, as I said, has the line of sight clear for a new high, which stands at 22,794. Bank Nifty, it needs to get to the 50% retracement. It's not done that yet, which is 48,479. It's been running a little slower, running behind what the Nifty has already done. And the 61.8 for the Nifty Bank is 48,832. And on the way down, the low for the Nifty Bank, which should not break, is 47,340. GIFT Nifty will come up on your screen. I would say that, the mood has changed. You can see that in the price action Wednesday, Thursday, Friday. And, of course, what we saw on Saturday in those 2 hours of trading as well. And it's more up than down. And we're also, as I said, also getting into the sort of period where the market will very intensely focus on trying to position what the election results throw our way. 50 points higher on the GIFT Nifty is the implied open. Sonia.
Absolutely. So it looks like it's going to be a very positive start this morning, right? Building on to the gains that we saw last week. And there are many triggers that will work out in our favor. Of course, one of them is Brent crude, by the way. Brent crude is now below $84 a barrel. It fell overnight. So that's another cue to track this morning. But apart from that, plenty of positives. As we've been telling you, the main theme really is the global cues that have been very, very strong for this market. So the US markets continue to surge. In fact, both on Friday, yesterday, of course, it was a bit of consolidation, but on Friday was really the big move. Nasdaq has hit record highs. All eyes will now be on Nvidia that reports its earnings on Wednesday, and we've seen the kind of spike up in that stock. So, the entire AI, IT sector will definitely be in focus. But the Dow has conquered that 40,000 mark. That happened on Friday, but nevertheless, those milestones have been conquered and held. So that's one space that our market is definitely going to focus on. For, in terms of flows, the FI selling has reduced a lot. It's reduced to just about 90 odd crores. So that's a positive thing. And the Nifty was up about 2% last week. So we will be building on to our gains today. And this pullback can continue as per what the GIFT Nifty is suggesting. The only thing is the voter turnout was on the lower side. And, that generally is not a great thing. Maharashtra and Bihar, very low voter turnout. Maharashtra was 54%, Bihar was 53%, as we know. But let's talk about some stocks that are in focus. I think BEL will definitely be in focus this morning, not just on the back of good numbers. A lot of brokerages, Jefferies has actually gone ahead and raised their target price on BEL to 305, which is the big upside to the current market price. And the company has beat their own order inflow guidance as well. They have received 30,000 crores of orders in FY24. Their guidance earlier was 20,000 crores. So this is one stock that definitely the street is going to focus on. The other one is India Cements. Weak numbers coming in from India Cements, but the entire cement space has been on the back burner a bit. So these are a couple of stocks that I'm looking at this morning. Of course, plenty of other stocks that will be in focus based on brokerages, etc. But my eye is on some of these companies that are manufacturing for the globe.
Yeah.
So for last week, we saw Dixon Technologies, talking about how they're really going big on mobile displays. Then BEL also, if you go through the brokerage reports, you'll notice that exports is now, the contribution of exports is now increasing. And that's the surprise element that a lot of brokerages are talking about. But what are you tracking this morning?
Well, let's start off with how the FI is positioned first up. Now, the FI is a country to remain net short, which, as we have been telling you, is not such a bad thing. 72% of their positions on the short side. In absolute terms, that numbers are still holding at around 2.5 lakh contracts. We need to adjust it. So if you're comparing data over the last year or longer than that, then you need to adjust it. So that 2.5 lakh contracts on the short side effectively looks like 1.25 lakh contracts. But a net short market, you want that. A market that's devoid of shorts in the system doesn't give you a reason to see a bit of a short covering bounce. What about the options data? I'm highlighting two strikes out here. There's various, out of the money call, out of the money put action. But I'm just looking at the nearest possible strikes. The 22,400 put, well, it has more than 40 lakh shares, as well as the 22,500 call, more than 40 lakh shares odd. So just plugging in the premiums out there, the near-term range you're looking at on the Nifty is around 22,325 on the downside. On the upside, it's around 22,650. This is the near-term range as per the options data. On the downside, the two technical levels you want to track is the 20 as well as the 100 DMA. You don't want the 100 DMA to break on the Nifty. And if you pull up the Nifty Bank, you don't want the 100 DMA to break on that one as well. It's at around 47,200 odd. So that becomes important. For the time being, we're at around the 20 DMA. So you'll want the Nifty Bank to build on from here on. So that's important. It's taken support at 100 DMA, gone past the 50 DMA, as well as the 20 DMA. Today, since it's a Tuesday, you'll have the Nifty Financial Services Index that will play out the weekly expiry. So some kind of volatility in the final 60 minutes or so. Two stocks I'm looking at. One is Vedanta. Everyone's talking about this melt up in metals. You've seen, silver prices hit the highest levels in more than 10 years. the only way to play silver here in India is via Hindustan Zinc. And the float on Hindustan Zinc is very, very limited. We spoke about Vedanta at around 300 rupees. We spoke about Hindustan Zinc as well at around 320, 330 rupees. And this is less than 45 days ago. So in case you want to play this entire base metal rally as well as some part of ferrous they have, well, Vedanta is best placed on that front. And the silver part that you've seen, well, there's only one stock that you can play, which is Hindustan Zinc, and Vedanta is a promoter. So Vedanta is a stock that I'll keep on my radar. The other one I'm looking at is IEX. You know, the stock, if you look at it, it's been taking out crucial levels. Now it's above the 20 DMA, the 50, the 100, as well as the 200 DMA. Between the 140 to 152, there was a bit of a resistance band. It's taken out all of that, and volumes as well were fairly decent. So that's the stock I'm looking at. A rank underperformer, still half from what we saw at its peak. But this one is showing signs that it wants to come back technically as well. Looking quite strong, guys.
Right, Nigel, thanks very much for that. So keep an eye out on many of these cues, and metals, as Nigel pointed out, should be in focus as well. Vedanta seeing a big move over the last couple of days. Saturday as well, it stood out. On the rupee, here are some views which are coming in. Abhishek Goenka of India Forex and Asset Management weighs in. He says the rupee strengthened on Friday to end at 83.33 to the dollar after several sessions of extremely range-bound price action. The WIX, he says, a spike in the run-up to the election outcome, but we have not seen a spike of a similar degree in the USD INR volatility, which indicates markets' confidence in the central bank's ability to manage volatility remains. Overall, he expects the dollar to trade with a slight weak bias against major currencies as US economic data surprises have been more negative off late. For the rupee, the range he sees is 82.6 to 83.8 in the medium term.
Okay, and let's also get you some views on the bond market. Vishal Goenka of IndiaBonds.com says the US yields gave up most their post-CPI gains of last week and are expected to edge wider ahead of the FOMC minutes on Thursday. Markets will remain range-bound for the next couple of weeks due to global bond index inclusion and election results. He expects a 10-year benchmark bond yield to trade in a range of 7.08 to 7.13%.
Well, we've got a lot of stocks that we're tracking for you in our special Top 10 segment. We'll get into further detail in just a bit. For the time being, we run you through the list. Oil India, BEL, SAIL, Biocon, Deepak Nitrite, all of them will be reacting to positive news flow. Add to the list IRFC, Whirlpool, Ujjivan Small Finance Bank, Kalpataru Projects, all of them on the positive side, and ONGC will be reacting to its numbers on the negative side.